Well, I thought there was enough insanity with Snapchat, completely non-profitable company, massive IPO, billions of dollars. Elon Musk company, Tesla, which, again, I'd love to own a Tesla, but they only sold a fraction of a fraction of a fraction of a percent compared to companies like GM last year. I think sold 200,000. They sold like 4,000. Failing miserably every year. 2015 and 2016 posted some of the worst losses for Tesla like ever. Yet it's worth an enormous amount of money. And the stock is worth $300 today. Again, I look at this stuff and ask myself, on what planet do I reside with this? Well, we may have to add another one to those two. We need to add a third one now. Uber. Wolf Richter has an interesting article on this one, Wolf Street, wolfstreet.com. Uber confirms horrendous loss in 2016, cementing its place as the most heavily loss-making private company in the history of Silicon Valley. But Uber sure can raise some capital for some reason. On Good Friday, when markets were closed and when the entire financial world was tuned out, and when certainly no one was supposed to pay attention, Uber, the most highly valued at $62.5 billion, and the most scandal-plagued tech startup in the world, took the until now unprecedented step of disclosing its audited revenues and losses for the fourth quarter and for the full year of 2016. Rumors of ballooning losses for 2016 has been swirling since last summer. Bloomberg reported in August that Uber had lost at least $1.2 billion in the first half. In December, Uber's loss in quarter three was said to exceed $800 million, according to Bloomberg, and its annual loss may hit $3 billion. Others chimed in as some of Uber's dozens of investors who were getting its financial statements shared them in dribs and drabs with the media. But on Friday, Uber itself disclosed that it lost $2.8 billion before interest, tax, depreciation, and employee stock options. The latter likely being a big chunk, by the way, as the earnings of publicly traded companies that award stock-based compensation, such as Twitter, regularly show. Translated into a net loss, including the expense for stock-based compensation, dizzying. But Uber, wisely, did not disclose it. The Financial Times, which reported this disclosure, mused that Uber is cementing its place as the most heavily loss-making private company in the history of Silicon Valley. In quarter four alone, it lost nearly $1 billion, $991 million to be exact. That's before interest, tax, depreciation, and stock-based compensation, which is up from 5% from the losses in quarter three, and nearly double its loss from quarter one. However, as Uber has expanded at breakneck speed into more than 70 countries, stirring up numerous hornets' nests of local and national laws and regulations, revenue soared over 200% from quarter one to reach $2.9 billion in quarter four. For the whole year, revenue reached $6.5 billion. This is the image of its skyrocketing 2016 quarterly revenues. In case you want to see that, we'll take a look here. In ballooning losses before, keyword, tax, depreciation, stock-based compensation. And as you can see, for some reason, it's odd, revenues are creeping up and losses are also creeping up. Now, you'd look at the last revenue quarter and say, that's quite a large jump, though, compared to the losses, right? But again, losses before interest, tax, depreciation, and employee stock options. And those employee stock options are going to be a big one. And you're going to hear simple standard accounting practices here in a minute. Allow them to produce these numbers. Uber recognizes the entire fare of shared carpool trips as revenue So let that sink in. Uber recognizes the entire fee they're charging someone to ride in a car as revenue. But you got to pay the employee. You got to pay the guy that's driving the car, right? Yes. But that's all included for us so we can show on our books that we made all that money without showing that we had to pay him anything. Though it then still has to pay, again, it still has to pay the driver. This has the effect of inflating net revenues, though it conforms to generally accepted accounting principles, also known as GAAP. For trips that are not shared, it only recognizes its commission, generally 25% of the fare, as revenues. If you burn $3 billion in cash a year, and maybe more in 2017, at what point do you run out of rope? How sustainable is the will of investors to plow billions into Uber, only to see this cash go up in smoke in such a short time? With investors considering Uber the best thing since sliced bread, it was able to do some phenomenal record fundraising in 2016, $5.05 billion in 3 rounds, plus some undisclosed amount in another round. So how much cash is left to be burned? Well, according to a person close to the company confirmed to the Financial Times, we just love those strategically placed leaks, that Uber is sitting on $7 billion in cash. It also can borrow $2.3 billion in available lines of credit. So that's close to $10 billion to fuel the loss billowing juggernaut. At the 2016 rate of cash burn, it could steam on for about 3 years. And at the current state of investor enthusiasm for Uber, it can still raise more, though these things can turn around on a dime. With this kind of money backing the company, it's no surprise that Uber doesn't need to take rules and laws around the globe all that seriously. It has become a veritable legal war machine to plow through any resistance, enforce its will, and get its way, although that has now turned out to not always work very smoothly. At this point, there are no public signs that investors are getting nervous about the company's inability to stop or even slow the cash drain. And they don't appear to have any illusions of ever turning this into a profitable enterprise. Reminds me of Snapchat. Reminds me of Tesla. If Tesla can't make a profit in 10 years of being in business, charging a lot more for their car than normal company, they're charging for like a high-end Lexus or Porsche or, high-end Mercedes prices for these cars. I'm talking about Tesla now. They can't make a profit in 10 years. How could they still be in existence? It doesn't make any sense, does it? Snapchat's been around for a few years. Hasn't been profitable yet. And again, they're saying we don't think we'll be this year or next year. Like, we're admitting it now. We're not trying to hide anything. We're not going to be making money this year. And we don't think we'll do so the year after either. Who would want to put their money in such a thing? This doesn't make any sense, does it? Unless the markets are completely rigged. Anyways, in the end, there is always the public to bail out the private investors. A company offering its shares to the public in what would be the most overhyped IPO of all times doesn't have to be profitable. It doesn't have a path to profitability for as long as they can keep raising new money to burn. See Snapchat, Twitter, and Tesla, he says, for more information on how that works. Which I guess that was, so this is the fourth one. Snap, not profitable. I guess assuming Twitter's not profitable, I didn't realize that one. 2017. Stand by. Open new link. I want to just see what this is about Twitter. This is from February. Not enough Americans can figure out why on earth to use Twitter. Even Trump's spectacular tweets don't help. Twitter now has reported net losses as accounted for under the required generally accepted accounting principles, GAAP, every year of its existence. Pretty soon, it adds up. Over the past 4 years, those losses amounted to $2.2 billion. So let me read that first line. Twitter now has reported net losses, according to their GAAP principles, every year of its existence. It is not a profitable company, period. So I'm going to have to remember as I talk about these things in the future, as I tend to do. Whenever I mention Snap and Tesla, I'll have to remind myself, add Twitter. Twitter's another one. But at least Twitter, when you tweet something, it stays there. Snapchat goes away. Matter of fact, I think I just pronounced it right. Snaptrap. Because it traps it and throws it away. Like you got out to my people, they saw what I snapped. Oh, what do you call it? When you do a Snapchat, you know how when you tweet or when you go to Twitter, you tweet. I sent out a tweet or I tweeted. When you send out a snap, did you snapped? Oh, I snapped yesterday. Oh, what, did you get pissed off and... No, I didn't snap like that. I just sent out a snap. A Snapchat. I snapped. Is that what you are? Or I snappled. Oh, wait a minute. Snapple, that's trademarked. Drink, beverage. Can't take that one. Anyways. Snap, Twitter, Tesla, and we can add Uber. Someone show me in the past, like prior to the year, we'll just say 2000 to be safe here. Prior to the year 2000, if you know the answer, go ahead and write it in the comments. Where this kind of thing was normal. Stock market, company IPOs, makes massive amounts of money, not profitable. Now, I know there's been some scams out there, such as Enron. Wasn't even a real company. Complete pyramid scheme type of or Ponzi scheme. Enron. It was like fake, though. These are like real companies trying to be profitable, and they're not. So somebody show me where a real company that wasn't a scandal, wasn't a scam, came out in the past, prior to the year 2000, and we saw this kind of activity. Massive IPO, 5 years later, 6 years later, still running strong, yet it's massively in the red. But their stock price is fantastic. Sometimes I don't even know what planet I'm on when I see this stuff. For now, in these days of endless liquidity come true, and with enough hype, everything can be made to fly for a lot longer than rational minds might have previously considered possible. So I think I just answered my own question. You don't even have to go back because this didn't exist before. That last little paragraph, sentence, I think I just answered my own question by, I should have read that last sentence before I even opened my mouth just now, because that would have answered it. For now, endless liquidity, these days of endless liquidity come true, and with enough hype, everything can be made to fly for a lot longer than rational minds, like mine and yours, might have previously considered possible. I would have never considered, again, 10 years, Twitter, how long's Twitter been around? Not profitable. Uber's fairly new to the game, but still been around long enough. Still not profitable. And again, last year, look at the last 2 years, 2015, 2016. Not necessarily Uber, but horrible. So, as he said, AutoNation, it's either one of the greatest Ponzi schemes of all time, or it's all going to work out, says Mike Jackson, CEO of AutoNation, the largest dealer group in the U.S., about Tesla, whose valuation is totally inexplicable. In fact, not inexplicable at all. Read what Tesla's inexplicable Ponzi scheme valuation says about the stock market, according to his link here, which I remember doing a story on that too, reading his article. So yeah, wow. Unfreaking believable. How many more? I got a remote control program I'm going to start selling, like, remote control your PC from work, from home, from work to home. Maybe I ought to just hire some little company, Wall Street firm, pump and dump this thing, except I do have a real company, and I plan on having it profitable as soon as possible, first year. Maybe it'll be worth billions. It'll be worth billions just because they pumped it up. But at least if it was for me, they'd actually have something and say, oh yeah, he's actually making money every year. That's good news. Anyways, on to the next one. Take care.